Hey ladies, welcome back. In the last video, we learned that for every $1,000 you stash safely in the bank, you get at most $1, while the bank is earning around $30, sometimes even up to $100 for your $1,000 that you invest. Today, I'm going to show you how you can earn at least 20, 30, even 40 times more than what you would in the bank by investing smartly and safely. I'm Marina Cooperman Villatoro, the Trader Chick. Fixed income investing. So, what exactly is fixed income investing? It's actually quite simple. Today I'm going to cover three major categories of fixed income investing. These three are, in my opinion, the safest possible way to grow your portfolio. And if you want to stay super conservative, putting the majority of your money into fixed income is a really safe way to grow your portfolio yearly, 20, 30, sometimes even 40 times more than what you would in the bank. First one I'm going to focus on is government bonds, are also known as treasury notes. Governments pretty much all over the world need money to make progress for whatever it is that they want to do. They could either have a building project that they're working on, roads. It could be whatever it is that they need at the moment. And what they do is that they put out bonds for people, for investors, to lend them money. Basically, so what they do is they lend you money, whoever decides to buy the bond, and they promise after the maturation date, the due date, that they will give you all your money back plus interest. Now, if this sounds too good to be true, think of it this way. The governments, if you're not going to lend them the money, the governments have to go to the bank. Banks always charge way more interest than they would if they put it out to the public. So really, it's a win-win situation. You earn interest and the government has money to put in to whatever project that they're working on. It's actually a fantastic way to invest and know that you'll definitely get all your money back. And at the end, you could get all your money back plus the interest what the government promised. But the best part about government bonds is they're tax exempt, meaning whatever gains you get, you don't have to pay any taxes on it, which is pretty amazing because usually for other investment opportunities, you do have to pay taxes on your gains. Again, it's a win-win situation. Second category, and the second safest possible way to invest with fixed income investing, is municipal bonds. Municipal bonds is really just a micro version of the government bond. For instance, a department of a state or a county or even the actual state, they all have different projects they need to work on. They need to maybe build a bridge, fix a road, build a new government building. So that needs money. And again, what they do is they put it out to investors to lend them the money at a certain interest. And again, the interest here is a little bit higher because now you're much more micro. And depending on the municipality, if they have a little bit more money to pay back. Again, what's really great about municipal bonds is the majority of them are tax exempt as well. And for the third category, and my most favorite, is corporation bonds, or known as corporate bonds. Corporations, depending on, it doesn't matter how established they are, from Apple, IBM, to smaller ones like Ralph Lauren or telecommunication companies, they all need money. They all need to borrow money. So instead of going to the bank and getting super high interest rates, they come to us investors. Corporations need money usually for if they're launching a new product, or if they want to start a whole new department, if they want to build a new building, whatever it is that they want to do, they actually don't have to disclose that information to us. And the great thing about corporations is that they offer a much higher interest in return for when the due date is, you get all your money back and interest. And chances are, a corporation such as Apple or IBM or McDonald's or whatever is not going bankrupt in like 1 year that you're going to lend them the money. So it's a really safe bet. And yeah, it could still be construed a little bit as less conservative simply because the reward is much higher and the risk is a little bit higher. But chances are it's a really safe and actually a fun way to invest. Okay, so now that we have the three categories of investing, government bonds being the safest, municipal bonds, I personally think they're a close tie, and then corporate bonds. These are the three safest three safest that you can invest. However, there are certain things you need to understand about how to invest with bonds. Okay, the first one is the time, the amount of time. Usually for bonds, you cannot do less than 1 year. You could do anywhere from 1 year up to 30 years. I would not recommend 30 years. I would say 1 year is a really good time because chances are not much is going to happen in 1 year. You get a really nice percentage at the end of the year. You could go up to 5 years, but your money isn't accessible. So if you take it out, you can get fined. And 30 years, that's way too long. I personally do not recommend that at all. And the difference in interest between the 1 year and the 5 years is not that big. So if you want to continue, what I would do is I would just reinvest. You could automatically reinvest in the same bond or take that money and reinvest in another bond that you're interested in. The most important thing is exactly how to invest in bonds. This is the situation with bonds. Whenever you choose one particular bond, there is a minimum that you can invest. Usually with government and municipality bonds, it's $1,000 or more. That's the minimum. Corporation bonds, if you focus on one particular corporation, it's usually $5,000 or more. So if you have a lot of money and you want to find your own, it's a great way to do it if you have a certain amount, I don't know, $10,000 or $100,000, but not many of us have that kind of money. So there are corporate bond funds. In the funds, you have many different corporations, let's say, or different government districts or different municipalities. You could really decide. There's so many different funds out there. And again, with funds, usually there's a minimum. There is a secret to diversification safely, smartly, and without any limit. Exchange traded funds, or otherwise known as ETFs. And this is my favorite way to go, and this is the only way I actually invest these days. So you get diversification. There are so many different ETFs out there for all categories. And you could buy the same day on the stock market like you would buy a stock and sell it either tomorrow or in a year, 10 years, it's up to you. But if you sell it for less time than the actual fund, the actual bond, what it is the interest rate gets prorated and added to your account. Also, there's no limit. You could buy 1 share or you could buy 1,000 shares. It's completely up to you. So it's all prorated. This is the best way to go. And personally, it's the only way I trade these days. Okay, so now what? What do we do next, right? I know you're probably thinking the same thing. There are so many bonds out there. Where do I start? How do I know which is a good one? How do I know which is a safe one? I felt the same way when I started. So I have a bonus for you. Down below, you can click a PDF file that I've made for you, which has some of the top fixed income investments for this year. And they're usually, the majority of them are exchange traded funds. If you want to learn more about the other types of funds, please contact me and we can talk about it. But I really prefer exchange traded funds. They're the easiest, they're the safest, and there's no deadlines. You don't have to pay any fees and you get the prorated interest. It's really the best solution for you. Now, I want to hear from you. What steps are you going to take to start building your portfolio? What fixed incomes are you most interested in? I'd love to hear from you. You could either write me a comment below or you could contact me directly. I'd love to hear from you. And if you have any questions, please let me know. And remember, ladies, investing can be simple and fun.